Do you want to invest in stocks but don't know where to start and how to pick them? In this video I'm going to share with you my TradingView stock screener so you can find value stocks worth investing in. Let's get right into it and create our value stock screen. So we'll be using TradingView for this, and we're gonna open a chart, any chart, and then at the bottom left we're gonna select stock screener. If you want some details on how to actually configure the stock screener in general terms, you can check out the video I'm linking here. So we're gonna want to select filters. For our value stock screen, we're going to focus on the parameters that you can see here. So first, this does not work well with financial stocks. So we're going to be filtering by sectors, and we will be looking at communications, electronic technology, energy minerals, health technology, technology services, and utilities. You can add some other sectors as well. These are just the ones I'm focusing on, but just make sure you leave out financial companies. So the next thing that we want to filter by is actually also the most important one, and that is enterprise value divided by the EBITDA. This ratio gives us a good indication of what is the real value of the company versus the stock value. We want this to be lower or equal to 20, and this is actually the value that financial investors look at when they're looking to acquire a company. So this will allow us to find value stocks that have currently an undervalued or discounted price in regards to the actual company value. There's two more filters that we're going to be looking at. The next one is the debt to equity ratio. We want this to be below or equal to 2. The reason that is that we prefer companies that actually fund their operations by funds that they completely own rather than debt. The next one is return on assets. We want it to be above or equal to 30. And that means basically what kind of return a company can make from the assets that they own. So we want it to be at least 30 or above. Now we're gonna get a list of stocks from our screen, from the filters that we just selected, and we will then sort this by the EV/EBITDA ratio. And the simple way to trade or to invest this kind of portfolio strategy is by just buying the 10 stocks that have the lowest EV/EBITDA value. It makes of course a lot of sense to also do some analysis about the stock to check out what are they actually doing. You can simply do that by selecting this icon in the top right corner here, selecting the stock, and then you will get an overview. What is the business about? You can also check the income statements. Of course, it pays to invest in stocks that see like strength and growth regarding their profit margin and regarding the net income. So you want to be checking out this as well. Want to be looking at the balance sheet. I mean, we're already filtering by the debt equity ratio, but here you can get a closer look to really understand, okay, how much cash does this company have on hand and how many liabilities do they have. Actually, you can see the debt to asset ratio here as well, which is a key factor for building a portfolio of value stocks with the screener I've just shown you. So, as I said, the simplest way is to just select 10 stocks that have the lowest EV/EBITDA ratio, and then you're gonna want to do some rebalancing quarterly, monthly or yearly, depending on your preferences and depending on the investment horizon that you have. And you just want to be selling the underperformers and buying more new stocks that have a low EV/EBITDA ratio from your 10 top stock selection filtered by the EV/EBITDA ratio. It's important that you understand that you should not be afraid to buy the stocks that others are selling, because this is exactly why this strategy works. This is exactly what allows us to have like little downside with a low stock price versus the actual company value, and a huge upside when these companies actually mean reward to higher prices again. The simple way really to look at it is the way that Warren Buffett puts it: be fearful when others are greedy and greedy when others are fearful. So these kind of stocks being sold off basically is due to investors having an opinion that they will not perform well over a period of time or in the near future. And this is exactly where we can have an opportunity to buy these stocks that nobody is looking at. And over time, they will come back, they will see better performance, and that's what's gonna earn you money. Alright, that's it. That's how you build a portfolio of value stocks with the stock screener I've just shown you. So if you enjoyed this video, please leave a like and subscribe so that we can continue creating high quality trading education for you for free. Thanks for watching, and see you in the next video.